Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, October 5th, 2018. It's a little before 10 o'clock, so we're just kicked off the first half hour of trading. And I just wanted to give a quick update to what I'm watching. I really just want to go over what I've already posted in the trading room this morning. But for silver members that, typically silver members aren't as active traders. If you're very active, you want to definitely look at the trading room. That requires gold access. That's where I post a lot of the in and out trades, active stuff, a lot of, trades based on 60-minute charts, which are good for swing trades lasting usually a day or two, sometimes a little bit more than that. And we'll get to those in a second. Natural gas and crude oil. I think there's some trading ops there that I posted today, and I still think there's an opportunity there right now. Let's just start out this with the euro, US dollar, and gold because I think we're getting closer to that breakout in gold. Like everything else, I may be wrong. There's a little bit of work to be done, but here's what we're looking at. I already put a post on the front page, so I'm going to go through this very quickly, but I didn't cover this part, and I know there's always new members coming to the site or existing members that may ebb and flow in and out of their trading. They may focus on work for a little while and come and take some time to trade or catch up on the charts and maybe position their investments if they're longer term investors. So this is the bigger picture for the outlook for the US dollar. And again, I like using the euro US dollar as my proxy. Euro is by far the largest. Nearly 2/3 of the dollar index is weighted against the euro, or comprised of the euro, I should say. So this chart, and just to sum it up very quickly, I've covered this many times in the past. This was a multi-year basing pattern, about a 2.5 year basing pattern. Very powerful, very bullish, confirmed with divergences. You see we had a divergent low on the weekly time frame. We broke out, we back tested the top of that basing pattern once. And this is really a support zone. It was a resistance zone at the top of that pattern. So we hit the top of it there. We hit the top again. And now most recently we hit the bottom of that support zone. And we're at the top again. So we're basically testing the top, and support is support until unless broken. So what precipitated this slide in the euro and rally in the dollar was very clearly, at least in my opinion, it was pointed out at the time, very clearly priced in the technicals. I didn't know we'd go this far back to get a back test because we already back tested once. But again, it's not. In fact, it's almost in line with the measurement of the pattern. If you take the widest part of a rising wedge pattern, which is right here, add that to where it breaks down, that gives you your measured target. Now those aren't exact, but sometimes you get a bigger correction out of wedge, sometimes you get a shallower correction. But so again, it's not too far out of there. There's that cane. By the way, I just got a price alert. As you can see, cane's hit the first target, so keep that in mind if you want to get out of that and book profits. I still like the longer term outlook for sugar at this point in time, intermediate, but I'll post an update. Also, before I forget, IEF, I let it go yesterday. Somebody asked about it in the trading room. It closed a couple cents below our max suggested stop. I'll post an update, but I still like treasuries and may add TLT back. Again, not to get off topic, but that pop-up just reminded me to let you guys know that TLT, if you didn't, or IEF, if you didn't notice, was stopped out yesterday. All right, so that's it. So like I said, support, holding so far. Probably spending more time on this than I really intended to, but also looking at a potential bullish crossover here. Those are always nice to see, bullish crossover, especially during a bull trend. They help to confirm that the momentum is shifting and turning back up. And of course, we're also coming off oversold levels. That's when you want to be buying. Ideally, you want to be selling or not chasing a security when it's oversold. And you want to be looking to maybe go long or cover shorts when things, or I should say, not being long or chasing longs when you're overbought. And then if you're short or looking to get long, you want to pay attention to these oversold readings. So that's it. That's the longer term case on the weekly. Daily, I've made this case before. We had a bear trap, false breakdown once. We started to go up and came back down again. So this may prove to be a second bear trap. Either way, it's a key level. And the way I see this is, look, we broke down the other day. If I think if the dollar was going to continue rallying, in other words, the euro is going much lower, the fact that we came through and it was a big impulsive red candle that was on Wednesday, I think we would have seen follow-up selling by now. Anything's possible. Resistance once or support once broken becomes resistance, but we're pushing back up against that level now. So again, and I've covered this recently. I don't want to spend too much time on it. What I'd like to see, what I'm expecting to see, we don't always get what we want, but that would be a recovery above this level. And I think with a second bear trap there, a little whipsaw signal below that key support level, I think this will be the final one before the euro really takes off. The dollar really starts sinking in its new downtrend that I'm expecting. And again, it's all about gold to me. If you're a currency trader, great. I do a lot of analysis on currencies because I do it mainly for my confirm or refute my analysis on gold. And if there's other currency pairs you trade and you want an opinion and you're a gold member, just drop me a line in the trading room and I'll be glad to chart any currency pair. In fact, anything with the chart, whether it's Bitcoin, anything that you can chart, I'll be glad to render an opinion if I have one. So there it is, 60-minute chart right here. Just like we had a divergent low here, rally, divergent high there, correction. We had a divergent low here. We had a trend line breakout right here. Came in for a low level back test right above the apex of the wedge. Pushed back up, and we're tapping on this 15,306-ish resistance level. We're starting to get above it now. And again, just based on this 60-minute chart, this helps to align what I'm expecting there on the daily chart. When I look at the daily chart, it's hard to make a case for a recovery of this line just based on what I'm seeing here. The momentum indicators are pointing down. We came almost oversold, but not all the way. But it's a 60-minute chart. So if this plays out the way I would expect it to, which is continued move higher, especially after this breakout and successful backtest, then that will regain that level on the daily chart. So a lot of talk here all about where the dollar and the euro might be headed, all for this one right here, gold futures. Of course, you can trade GLD, DGP, any of the ETFs if you're not a futures trader, but the futures are really the raw information. And GLD does, by the way, a very good job of tracking. And GLD is actually, it's so liquid, so popular. Some of the world's biggest hedge funds, mutual funds, they buy GLD instead of gold futures. So I have no problem using gold as a charting proxy. The only thing is you get a heads up with gold futures because of the round the clock trading that you don't get with GLD. And again, so that round the clock trading shows a lot more reactions, and I've talked on it till I'm blue in the face here, but that's that 12, 13 level. All these reactions on this horizontal green line coming in together with this downtrend line right here. A lot of reactions on both. And like I say, the more resistance levels, if you have them in close proximity, if they're taken out, the more bullish that is. So again, this breakout is largely, if not exclusively, contingent on that euro US dollar scenario playing out. But the fact that they're both in near perfect alignment, like I said, if we get that bull trap, that recovery back at that key level on the euro, and that can spark a rally in the euro, a sell-off in the dollar, gold should pop above this level, and when it does, I think that's a lot of pent-up energy. We've been basing sideways here since early August, below that 12-13 level. So there it is, and I harp on it only because I think there's a lot of potential there. We don't have the buy signal yet. I will tell you, I'm positioned in advance. Well, we have the GDX trade, the PPLT official trade. I've been in and out of gold futures, but I bought some back this. Was it last night or this morning? Been trading pretty actively lately. I can't recall, but there it is. And then I will most certainly add to that. And I also like to do a video soon or post some individual gold mining stocks in the trading room, whether they're official or unofficial trade ideas. So that's it. A lot of time spent on those two, but I think it's worth watching because there may be a big move coming in gold if all these things play out. Crude oil, CL. Well, we had a breakdown earlier. I posted this in the trading room. It looked legit. I think we'll still get it. And there's maybe another reaction here. This is a little fake out move. What I'm referring to, this is a 60-minute chart of CL crude futures. And I like to sniff out a couple things. I like to look for divergent highs. You see the divergence lines on the RSI and the PPO. They give you that negative divergence. We had a divergent high right there, a little one, and a little correction that followed right there off that divergent high. And now, most recently, we had this divergent high right here. Really look at this line against and right here. And so that's your most recent divergent high. And I posted this yesterday, and also in the trading room posted, shorting crude and covering it right above that trend line I forget, right around there somewhere, expecting a reaction. We got it. Um, so today I'm expecting a breakdown since we had a reaction there. Uh, there, we could work our way up. There's a little bit of very small divergence right here. And so far we have a fake out. So this looked like the real deal. I'll have to watch this one. I shorted it this morning, but I'll give it a little room up above there. I think it'll probably want to pop above there to clear the stops, to be honest with you. So what I think will happen, pop above there, but I wouldn't give it too much room above that level. And again, I'm referring to that tight cluster of the reactions. And in other words, let me do this for you. If you're trading crude, put a line right there, and you can see it was support here and its resistance there, and that line's at about 74.89. Being that we just had a fake false breakdown below there, they're probably going to pop that. How far they take it, hard to say, because we can certainly run back up, extend these divergences, and then reverse at higher levels and come back down. You can see no matter what crude does from here, at least in the near term, I'm talking the next few days, or at least today, maybe in early next week, no matter what it does, um, well, it could, yeah. Even if it continues a lot higher, takes out the recent highs, I'll just have to move these divergence lines up. So we may have another shot. So if this trade doesn't pan out and we come up here, we'll have another divergent high, and I'll be on lookout for that. We might get a short entry there on the divergent high, and then of course on a break of this trend line. Whether it comes today, whether we fail after a brief pop or a rejection, possible we reject off the 74.90ish level, or we pop a little above it, but that's your next sell signal. Targets are 72.70, 71.39. You should be able to replicate this chart with USO. Again, futures trade around the clock, USO doesn't. But if you look at just where you see these areas of consolidation and the reactions as well, they should line up or correlate. And again, if you're a gold member, just drop me a line in the trading room, and I can, if you're planning to trade USO or DWT or one of those. And here's another trend line I expect to come in. So I'm drawing a lot of arrows, probably making your head spin. But whether we get a breakdown soon, I expect a move down to 72.70, followed by a reaction, and a move back down here to that 71.39, I think it was, which will also come in around this uptrend line. And that's a good place that I'll probably look to position long, especially if we have divergence there. So that's CL, and then natural gas. This one, nope, that's NQ. I should have covered that earlier. Let me find nat gas for you. Hold on. There it is. All right. So I posted this one yesterday too. I had a short on this in the trading room. There was nice clean. Look at that, how steep that wedge is. Big divergence. Here's your negative divergence building from this point on. We had a slight wedge overthrow. I actually like those. Usually when you get a wedge overthrow or overshoot, it's a brief pop above a bearish rising wedge, followed by a move back in and almost an immediate breakdown. And that's what we had. Very impulsive move. Little kickback rally. We got pretty oversold in the near term. And so I posted it this morning, up around here, likely to follow Crude's lead. So I've got a short on this one too. And I'm looking for a move down to 3108 and then, or 3.108. And then 3062. Those are the actual support levels. So my plan's to cover above this one, reshort if we get a bounce, and then swing it down for move down there, and then probably, well, you know what, we may come all the way down here, but right now I'm looking at these two targets. So we'll see what happens, and you know, excuse me, sorry about that. Sometimes natural gas will follow crude's lead. Lately, it's been doing that. Sometimes they march to a different drumbeat, but more recently, lately, there has been a lag. I think Francis Q also pointed that out in the trading room. That it seems that NQ is just behind crude with what it's doing on its runs lately. Running up in an uptrend, then breaking down. So again, we'll watch both of those, and let's just wrap up with a quick look at the futures. Here's NQ. Everything covered this ad nauseum lately, so I'm not going to go into this again. But I will say that the bounce that I was looking for, we were, as I said yesterday, very oversold. Excuse me, down quite a bit, and almost well over 2%. And we had a reaction. I expected a reaction. There's not enough in the charts to say that we're going to be that we are in waterfall sell-off mode now. We could be very soon. If we end up down today, we undercut these lows, coming down here. That's support, so we're probably going to get a reaction, but I'll tell you, if we get some ugly price action today, and I'll have to look at the towards the close, look at the weekly candlesticks, the dailies, we could get that waterfall type sell-off coming next week, but maybe not. Maybe this is just a pullback to this is my minimum target, and that might be all we get right now, and then the market may want another thrust up. But either way, I think after yesterday, and I said this in the last video, and the one that I did midday, I'm not looking for a very big bounce. I do see the possibility, the potential for a move all the way back up here to 76.25. I'd put the probability at very low. I'd say maybe 10%, 20%. Probably 10 is too low. 20%, anything's possible. But I think this might be this bounce we had this morning. We had a little pop at 8:30 a.m. after the employment numbers. That's where I added back this NQ short. I think that's it. If we push higher, I have room to add. Or if we break down impulsively and we start waterfalling down, I can add to that position too. So I'm keeping it light with a partial position now. But I do think, again, there's a good shot, better than 50% that we've probably seen the end of this bounce. In other words, it's more of a consolidation. I talk about reactions. This is more of a consolidation. It's choppy. You trade it. It's pretty big swings on NQ, but as far as a bigger picture, it just looks like it's not a perfect bear flag or anything like that, but it is. A bear flag is simply consolidation after a sharp move down. And so you have this sideways trading, which is just a consolidation. Everything's like a rubber band. It can only stretch so far. And I think that's what's happened here. So look for a breakdown below this consolidation zone, and it could bring us, much below that 74.38-ish target there. Look at ES, and we'll wrap it up. ES, not much new to report. There's that not long term. I'm sorry. It's a 60-minute trend line off the late June lows. Pretty clear and impulsive breakdown. A little bit of consolidation here. But so far, lackluster bounce. They're not buying the dip. I mean, they stepped in again because we were down quite a bit yesterday. NQ especially. NQ was more stretch, and everybody loves Apple. Everybody loves Amazon. But so I think, you usually get that in the initial stages. Once a correction starts, early on, the dip buyers are coming in more aggressively. Then as things start going down, they realize, oh, all of a sudden something's wrong. It's not working. Everything I've been doing for months now, buying, any 2, 3%, 1, 2, 3% pullback has worked. When what's working stops working, that's where the dip buyers start to step back. Stops start to get hit. Shorts start to get more emboldened and step in. And that's where you get that. That's what I'm looking for. And that would be that, start to see the selling accelerate. And here's your targets on ES, 28.70.50 roughly. If that gets taken out with conviction, 28.26 be the next target there. Possibly some minor support right around here, that level there. I could do that. And of course, if things get ugly, the potential certainly in the charts. There's a lot of stuff that's happening, longer term stuff that indicates we could have a big flush out, and I do think we're going to have a big sell off in Q4. This could be the beginning of it, or this could just be an early little correction, shot across the bow before we go on up. I don't know, but I will tell you I want to be ready for it if it comes. That's the thing about those sharp corrections. The market likes to catch traders off guard, so just be prepared. That's all. All right, let's see. I think that's it. Let's wrap it up here. Keep this one short. Watching crude oil, nat gas, gold, of course the equity markets, and then all the individual trade ideas. Those are separate themselves. I'll do an update on Treasury bonds soon, and follow up with either some charts later today or maybe another video. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.